the RBI has drafted some guidelines for gold loans, and the Finance Ministry has made some recommendations to the RBI to safeguard the vulnerable sections of the society from these strict regulations. Hello and welcome to Drishti IAS. My name is Saloni Nankyoliar, and today we will understand the consequences of these guidelines and these recommendations on the lending ecosystem. So before we dive into the exact news, I want you to look at the question on screen to understand the importance of this topic. This topic is covered under GS paper 3 of Indian economy, and time and again UPSC has been asking questions in prelims and mains on RBI, the role of RBI, gold loans or any other monetary policy, anything associated with RBI and finance. All these things have been asked in previous years. So this is a question that was asked in prelims because sovereign gold bonds and gold monetization scheme was in news, and mains also a lot of questions have been asked, which we will cover towards the end. So what is the news? The news is that in April 2025, RBI issued or drafted some guidelines for gold loans. So gold loan is a loan that you get against your against keeping your gold as collateral. So RBI drafted some new guidelines, and then it sent these guidelines to the Finance Ministry to get its recommendations. Now the Finance Ministry has come back to the RBI saying or making some recommendations to safeguard the small borrowers or vulnerable section of the society. So what has the Finance Ministry said? The Finance Ministry said that loan up to 2 lakh rupees should be exempted from the strict regulations. So this is being done to safeguard the small borrowers. People who need loans only up to 2 lakh rupees should be saved from these strict regulations so that they can avail the benefit of these loans. And it also said that the implementation date should be deferred to 1st January 2026. So these 6 months, 7 months should be given to everybody to adapt to the new ecosystem, and the implementation date should also be deferred. This is what has happened right now. And what were RBI's original guidelines? So the RBI's guidelines said that the loan to value ratio or LTV should be capped at 75%. So what is loan to value ratio? If you break the term down, this is the amount of loan that you can get against any value of your gold. So let's say I am the borrower and I go to the bank. I have gold worth rupees 1 lakh with me. Then if my loan to value ratio is 75%, how much can I get as loan? The maximum that I can get is 75k. So 75% loan to value ratio means you are capping the amount of loan that you can get against the value of your gold. That will be 75%. And this percent or this figure keeps changing. So before 2012, it used to be as high as 85-90%. Then again, it was capped at 75%. Then during COVID, again, it was increased. And now again, this has been moved to 75%. So if you understand the calculation part of it, if this figure goes up, so as I said that before 2012, this was as high as 85 to 90%. So what does this mean? That on the same gold value of 1 lakh rupees, I could have gotten 90,000 as loan. So who is this benefiting? This is benefiting the borrower and not the lender. So in this case, the borrower will get more, but the lender can be at risk. If the gold price is crashed, then they'll get lesser amount. So they'll have to pay more. If my gold amount is 1 lakh rupees, I'll have to pay 90,000 as loan. So lender is at more risk, borrower is at gain here. So these prices keep going up and down, but now to safeguard the financial institutions for a couple of years, this has been kept at 75%. And what is the permitted collateral? Permitted collateral for these gold loans? It is any gold jewelry or bank issued coins. Gold jewelry or bank issued coins. So this is permitted, but what is not permitted? Not permitted is primary gold. What is not permitted is primary gold. Primary gold is all form of raw and unfinished gold. So what can be raw and unfinished gold? That can be gold bars or bullions, anything that has not been worked upon, that has not been given a different shape, is a raw or unfinished gold. So you cannot avail any gold loan or any loan on that gold. What can be permitted is only gold jewelry and bank issued coins. Other than that, the value has been standardized and it has been kept as 22 carat. So think of it this way, people have gold, people have different forms of jewelry and the purity can differ. Somebody can have 18K, somebody can have 22K, somebody can have 24K. So the loan, how will you decide how much loan to give to somebody? There has to be a standardization of things. So the valuation has been standardized at 22K. So whatever is the purity of gold that you bring to the bank is going to convert it to 22K, and then whatever amount comes, that will be the amount that can be loaned to you. So valuation has been standardized. Then some interesting things that have happened is the proof of ownership. So now you will also have to show that you own this gold. You will have to prove that you own this gold. You should have the valid documentation like your bills. So these things, you should have them with you. And if you don't have the bills, then probably you would need some form of an affidavit from the owner of the shop from where you purchased that item. So proof of ownership is also very crucial. They have been mentioned in the strict guidelines, and purpose is also to be specified. What do we mean by purpose specification? So if somebody goes to get a loan, there are two major things in which he or she can spend that loan amount. Number one is personal consumption. And number two is income generation. Any loan, and even gold loan, so whatever amount you get, they can be used in major two categories: personal consumption and income generation. So personal consumption will cover all forms of immediate consumption needs, like you have some medical bills to pay, you have some other consumption needs that you need to take care of. Anything which is not going to generate income or an asset for you will be covered under personal consumption. So rules for personal consumption are different, and rules for income generation or asset generation, they are different. So when you go to avail a loan under the new RBI gold guidelines, you'll have to tell them or specify the purpose for which you are getting this gold loan. And there is a cap on collateral, which means I cannot just go and keep all the gold that I have with me and ask for a loan in return. So there has been a cap that's been decided, and that's 1 kg per person. This is the maximum gold that you can go and use as collateral, that you can use in collateral and get loan in return. So the collateral has also been capped, and the same gold cannot be pledged for multiple loans. So the problem that was happening earlier, because of which all these strict guidelines have to come in, was that these rules were not very strict and people were pledging the same gold multiple times. So same amount of gold, because there was no proper documentation in place or no oversight in place. That is the reason people were using the same gold. They were pledging it for multiple loans. So now this will be very strictly regulated, and the same gold cannot be pledged for multiple loans until and unless the previous loan has been completely repaid. So if you repay the complete loan and you get your collateral back, after that you can use the same loan and get same gold and get another loan, but simultaneously you cannot do that. So this is what the RBI said. Again, what was the need for these strict guidelines? The NPAs are increasing. NPAs or non-performing assets. So gold is a form of loan that people can avail with immediate effect. So we have gold at our homes, and if we need money immediately, we can always go to the bank and we can ask them for loan. So it can help us in immediate need. But when people are not able to repay it, then this creates a stress on the bank's assets, and then NPAs increase. So because these gold loan NPAs were increasing so much, RBI felt that there is a need to have proper and stricter regulations in place to see who can get what amount of loan and who cannot. And the same collateral was being used for multiple loans. This we already discussed. And gold prices are volatile. This is a very important thing, because we know that the gold prices keep going up and down. And now, because the gold prices were shooting up, people started applying for more gold loans, because now they would the value of the gold has increased. Think of it from the LTV perspective, loan to value perspective. So when the value of the gold has increased, the 75% on that value is automatically going to fetch me more money. So because the gold prices are going up, they are so volatile, people started taking more gold loans, and then they were not able to repay it, because if you take more loan, you will have to repay more loan. So if the capacity is not changed, but the loan amount has increased, then you will find it difficult to repay it. So that is the reason that the NPAs were also increasing, and it was also causing a problem to the lenders. So in this case, the banks. So if somebody takes a loan of 75, let's say at 75%, it's 75,000 rupees. Now the gold prices, if they crash, then when the lender is going to get that money back, it will be lesser in amount. So lenders were basically at risk in this case. So that is the reason that there was a need for RBI guidelines, for stricter RBI guidelines to be in place, and that is what RBI did. And it finally sent it to the finance ministry for its recommendations, and the finance ministry came back with two major recommendations, because government has to work in a welfare manner. It has to keep in mind the socio-economic conditions of its people, and ensure that the benefits reach to the target audience, and the volatile section does not suffer because of these regulations. So that is what it did. It suggested that there should be a cap on 2 lakh, up to 2 lakh rupees, that up to 2 lakh, if somebody wants to get a loan, they will not be placed under these strict guidelines. And the implementation date should also be changed to 1st January 2026, so that we have some time to adapt to the new ecosystem, the new lending ecosystem. So this is what the finance ministry made recommendations for. And why was this done? For financial inclusion, because these people, the volatile section or the vulnerable section of the society is the section that makes use of this gold loan the most, because they have this gold with them, whatever gold they have with them, not like a lot with them, but whatever they have with them, that is the first, that is their first thing to fall back on, that they'll just go to the bank with the loan, or with the gold that they have with them, and get money in return, because other than that, they do not have a lot of other ways to get money for. So in order to increase the financial inclusion, that these people should not suffer or think twice before getting this loan, that is the reason that finance ministry made these recommendations, to avoid over regulation for small loans. And because the timeline was deferred to 1st January, now we have time for system readiness. With the positive outcomes, you can also think of some challenges. So there are going to be some challenges, even though this is a positive step, there are going to be challenges, and the challenges can be that there can be a potential arbitrage, which means that now, because the cap has been kept at 2 lakh rupees, this could be used as a loophole, and people or social disturbing elements could divide their loans into groups of 2 lakhs, 2 lakhs, 2 lakhs, in order to safeguard themselves from the strict regulations. So this is something that can happen, and this will require a lot of oversight, proper implementation, to see that these regulations are not being misused. Documentation hurdles are always going to be there. Even after 2 lakh rupees, people will have to give proper documentation. People will have to prove ownership. Now, if you think of it, in India, in our culture, gold is a very valuable gift. So even in marriages, even in any auspicious ceremonies, gold is preferred to be a very valuable gift. Now, how are you going to prove your ownership for the gold that you have either inherited or has been gifted to you? So because it is mandatory for you to prove your ownership, all the gold that is gifted, all the gold that has been inherited from past generations, it is going to be very difficult for you to prove that that particular gold, it belongs to you. So this can be a potential challenge in this implementation. And of course, there are emotional factors, which means because in Indian households, we are so emotionally connected, culturally connected with the gold that we have, any failure in repayment will mean that the bank is going to sell that collateral off, and in this case, our collateral is gold. So when the gold is going to be sold off, so the loss is going to be more than financial, which means the loss is also going to be traditional, emotional, cultural, in all ways, and also social. So all these things, the loss is not just financial. That is the reason that could be a challenge in this with the complete gold loan system and with strict regulations. So these are some possible challenges that are there in place. But a question that should come to your mind is that after the finance ministry has made these recommendations, is the RBI mandated to accept these recommendations? So no, legally RBI is not mandated to accept these recommendations. Why is it not mandated? From where does it derive this power? So it derives this power from the RBI Act of 1934. So you must know that RBI was created by the RBI Act of 1934. It was established in 1935 as a private entity. So at that time, it was owned by a group of shareholders, some private entities. It was not a national institution, but it derives this power of not not being legally mandated to accept recommendations, which means it has the power of autonomy. Autonomy in what matters? In financial matters, in matters of formulating and regulating monetary policy, in issuance of currency, in foreign exchange reserves, in managing the foreign exchange reserves. It has an amount of or a degree of autonomy, which this derives from the RBI Act of 1934. Now, established in 1935, but in 1949, it was nationalized. What do we mean by this being nationalized? It means that from a private entity, it now became a public entity, which means that the government of India, there was a transfer of ownership, and the government of India holds 100% stake in the central government. So now you could think of a contradiction, that even though the government of India holds 100% ownership in its 100% ownership in the RBI, even then RBI is not legally mandated to control to accept these recommendations made by the government of India. Why? Because RBI is autonomous in the functioning of monetary policy, financial supervision, currency issuance, and maintaining financial stability. But by the nationalization part, we can understand that though RBI is autonomous, but it is not completely independent. RBI is autonomous, but not completely independent. So even in the RBI Act of 1934, there is a section 7, which is often in news, and section 7 gives the government of India the power to issue guidelines or recommendations to the RBI in the matters of public interest. So if the government of India feels that there is a matter that's of public interest, it can issue recommendations to the RBI. So both RBI and government of India, they work in collaboration with each other, and we need to understand that RBI has a certain degree of autonomy in the financial decisions, but it is not a completely independent body. And why is RBI issuing all these guidelines for gold loan and everything? Because RBI is the banker's bank. RBI is the authority that that gives guidelines to both banking institutions and non-banking finance companies. And these are the people like non-banking finance companies and banking institutions are the agencies that are going to give gold loan to people. And that is the reason RBI is making these guidelines or recommendations for banks and NBFCs, and it has the autonomy to do so. That is all for today's video. Let's quickly summarize what we learned. We learned that RBI has created new guidelines because of the growing gold loan NPAs. There are some strict guidelines in place, and the finance ministry has made some recommendations to save the vulnerable section of the society from these strict implications. And the RBI, though, is an autonomous body, but it is not completely independent, meaning it still works it still has the complete ownership still is with the government of India. And for all these things to work properly, for all the rules to work properly and the challenges to be overcome, we need to have proper oversight and correct implementation of the guidelines that have been drafted by the RBI. And as promised, this is a previous year question that was asked in mains. So the role of RBI was asked in regulating NBFCs, and the impact of gold monetization schemes was also asked. And this should give you an idea that this topic is not just important for prelims, it is also important for mains, and you should study it in a holistic manner. Now I would want you to practice 2 questions, one for prelims and one for mains. So what does loan to value ratio signify in gold loans? Please look at the options given on screen and provide your answers in the comment section below. Also, attempt this question for mains in 250 words. So that was all for today's video. Until we meet the next time, please keep studying and keep revising.
For more informative content, like, share and subscribe, and do not forget to press the bell icon to get the notifications.